Yeah, because
So
what ends up happening is that the 10-year being at 0.6, and if inflation's 2, you end up with minus 1.4. So it's basically a negative yielding asset, whereas gold is 0, right? So what's the only thing worse than 0 is negative.
This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Why trade alone when you can access over 100 years of trading experience right at your fingertips? Simple strategies, proven tools, real-time alerts, and an interactive trading community await. Keep it simpler with Simpler Trading by visiting their website at simplertrading.com and check it out with a $7 trial today. That's at simplertrading.com. Hey, make sure you subscribe and hit the bell so you'll be notified every time we give you more tools, tips, and tricks to help you trade faster and trade smarter every single week. Hey there, traders. Welcome back to today's How to Trade Stocks and Options podcast. Today, we have a special guest online, Sam Shames. Sam's going to be talking about the gold market here, and he's the Director of Equities down at Simpler Trading in Austin. Sam, very excited to learn about this. So I was telling Sam before we started here today that I've been long gold for a little while, mainly because for me, it was just above its, I believe it's 20-day or something exponential moving average. I'd done some back testing. And I was like, this looks like a really solid back-tested line here. I'm just going to trade it. And so when it crossed over that a month or two ago, went ahead and put a position on, and it's done great. It's up nearly 12% or more at this point. And I was asking Sam if he'd been trading as well, and he said he's been in and out as a trader versus a longer-term holder like I've been. And Sam, I'm really interested. What in the world is going on with gold? We're seeing new all-time highs. Does this mean that is it the run on the Aztecs or whatever back from Columbus days, and now it's finally catching up to the price it should be? What's going on out there?
Yeah, they finally absorbed the supply from
Yes.
Montezuma. Yeah, it's a combination of a couple of things, Chris. It's mostly going to have to do, at least in this current slice of time, with the dollar. So if you pull up a chart of gold and then you pull up a chart of the U.S. dollar, they're kind of going in the opposite direction. That hadn't been the case. Normally, that is the case where the dollar going lower is actually really beneficial for gold, but for the last 6 years or so, they've actually been kind of tracking together. And then we saw most recently, probably in the last 12 to 18 months, that divergence come back. So dollar getting hit is actually helping gold. The big signal for gold long term actually isn't the dollar; it is the real interest rate. So you take the interest rate and minus inflation, and that's your real signal. And that's been active the whole time. Fed's had interest rates very low for a long time, but now you have a combination of that signal plus the dollar getting really whacked lately, and it's just coming to a point with gold.
Okay, I have several questions, follow-up questions. I love follow-up questions. So first off, what would you call the real interest rate? You were saying you just said the rate minus the inflation rate. What is the rate? Is that like
the
20-year, 10-year? What rate are you talking about?
You can use the 10 or the 30, most commonly the 10, and right now it's about 0.6.
Okay, and inflation, let's call it, what are you using for that, 3%, or has that changed?
Well, they're targeting 2, right?
2, okay.
Yeah, so if you take the inflation minus the rate there, you end up with pretty much negative, right?
Right, and that's where I was going. So is that negative rate, negative signal, I guess you could say, is that the signal for gold that you were talking about?
Exactly.
Okay. Exactly. Now we digested it. That's where I want to get to. Okay.
Yeah, because what ends up happening is that the 10-year being at 0.6, and if inflation's 2, you end up with minus 1.4. So it's basically a negative yielding asset, whereas gold is 0, right? So what's the only thing worse than 0 is negative.
Yeah. Okay. So being that the real rate minus inflation is at negative 1.4, gold being at 0, is that the only asset that seems like worthwhile to get into? Like, who's getting into gold, right? Why not buy Netflix?
That's a good point. And actually, the same things that benefit gold will benefit Netflix. So really what we're talking about when we kind of read between the lines is inflationary forces. And inflationary forces show up obviously in gold, but they will show up in stocks. So it's not too crazy to say that gold and something like Netflix would act similarly, because similar forces are acting on them.
And if you take a look at like any chart, I mean, it seems like every stock since March has like doubled or tripled or more.
Yeah, exactly. Especially tech.
So, all right. So now we're looking at gold. Who's buying it, right? Is it the retail investors or is it institutions that are getting into gold?
I think we've hit a really good sweet spot where it's pretty much everyone. I'm not sure. I think maybe a better question would be who's selling gold at this point in
Okay.
time. Yeah,
I'll hear that question. Yeah.
yeah, and an imbalance of buyers or sellers would cause the price to go up. I think it is retail. I think it is institutions as well, like hedge funds, mutual funds, things like that, and and I also think it's governments. So governments kind of see what's coming on the horizon. They hear their money printer running nonstop, and
Yeah.
they think it's a good idea to maybe bolster their selves with a little bit of gold.
Okay. Okay. So what's it going to take to get gold to reverse, right? Is it going to be monetary policy change? Is it going to be rising interest rates? What is it to Sam, the director of equities over there? What does he think it's going to be? Like you're calling up Jerome Powell and you're saying, "Listen, Jerome, this is what it's going to be. All right, we need gold to come back down. What's it going to be?"
Well, it's kind of a it would be. I don't know if hypothetical is the right word, but the only way that gold's going to come back down is if they reverse everything that they've done so far. So they'd have to raise rates, which they're not going to do, and they'd have to strengthen the dollar again. And Fed has pretty explicitly said they don't want a strong dollar. So
Mm.
in order for gold to get the legs taken out from under it, interest rates up and dollar stronger.
Now, why don't we want a strong dollar?
Because if the dollar gets too strong, it starts to weigh on international currencies. So it makes it very difficult for everyone outside of the United States to repay debt. So a strong dollar, it's like putting a ball and chain around the rest of the world
Mm.
when it comes to debt
Interesting.
repayments.
Okay. So what does this look like in the short term, right? Are we still bullish gold? Because nothing's really looking like it's going to change. But I mean, we're pushing all-time highs, and for some people, all-time highs signal a buy point, and for some people, it equals a sell point. What's it look like to you?
Yeah, I mean, hopefully they've been in it like yourself, and they're looking at it as a sell point, the initial test of the 2000 level. I think at this current juncture, as a trader, of course, well, let me give you 2 points of view. I'll give you one as a trader and maybe one as an investor. As an investor, I think anywhere 2000 and below is just buy and hold. Just
Hmm.
buy and hold. I think 2000 becomes the floor for the next 10 years, if not more. I've been telling folks in the room now for probably 18 months that they're never going to see prices of gold or silver, for that matter, back at these levels again in their life, in their entire life. I truly believe that. If you look back at, so you do some charting, right?
Hmm.
If you look at, let's say, a chart of gold on a monthly, um, for about 6 or 7 years, it put in a really gigantic base. So now
Hmm.
it's coming out of that base and making a new all-time high. Silver's doing the same thing, but it's actually way behind gold. So the fact that silver has the same structure but has not moved yet, and that setup is still completely valid, it tells me that there's a lot more energy left in the space, and it's going to be probably expressed through silver in the next run.
Oh, really? Okay. Because silver's had a couple like big days recently where it's been up like 6% or so. Do you feel that was just the beginning, or maybe that was the energy in it?
I think it's both. I think it's the beginning of basically things get kind of coiled up, in markets where they trade sideways for an extended amount of time, and then they just kind of spring out of that. And we saw that happen in gold already, and I think silver is actually happening now.
Okay. So Sam, you mentioned to me before we started talking that there may be another asset class that people had not thought of, but could also have a similar run. What are you thinking there?
Yeah, so we've been talking about gold and silver, and honestly, I should throw stocks in there as well. There are going to be some inflationary forces that will benefit the stock market, but the other asset class that I think works really well in this environment is going to be something like Bitcoin, or really crypto in general, but specifically Bitcoin. And the reason is because Bitcoin and gold, they share very similar properties. So a lot of folks think that Bitcoin will eventually be a replacement for their Visa card. And in reality, it's not really designed for that. It's not going to be a credit card replacement or really even a payment system. Really, what Bitcoin is designed to do and the properties that are built into it mirror gold. So it's a store of value, and it's deflationary. So over time, while more and more money is being printed, as we've talked about, um, there's less and less Bitcoin to absorb that. So it has a lot of similarities to gold, and we're seeing the same thing happen in Bitcoin now, starting to break
Okay.
out.
So do you trade Bitcoin?
Yeah, I do.
Okay, okay. I had who was it over there that I had on before a couple times? One of the traders in there, he gave us two really solid lessons on how to trade crypto, and the audience out there can Google it. We called it just like crypto trading 101 and crypto trading 102. What kind of forces are you looking at in crypto trading? Do you look at it more on a fundamental level, or because I mean that's kind of how we're talking now, or are you looking at it at more like a technical level?
Primarily, I trade off technicals. So
Okay.
the chart has to work with the story. The Bitcoin story has made sense for some time, but the charts haven't worked. And now we see the story still makes sense, but the charts are working now. So Bitcoin has a similar kind of structure to gold, where it had a very prolonged base, and now it's starting to break out. Gold is actually leading the charge. Silver's behind gold, and then Bitcoin is behind all three, or behind both of them. So my belief is that Bitcoin's actually going to jump to the front and actually outpace gold and silver on a percentage basis by a large amount on the run higher.
Interesting. Well, I can kind of get behind that because given the idea that gold is your grandfather's asset or whatever, whereas Bitcoin is like the new money kind of thing. That to me seems to speak more to how people are quote unquote investing these days, right? Where they've got some extra funds from stimulus money or what have you, and now they're looking to put it into something. And so I don't think that they're looking to put it in gold. I think they're looking to put it into Apple's new stock split or something on that nature. And I could definitely see Bitcoin getting the magnetism for those funds as well.
Yeah, I think all it takes is a little bit of momentum. We have the gold room here at Simpler Trading, and we've seen more questions regarding gold in the past 2 weeks than probably in the last 2 years. So
Yeah.
a little bit of momentum gets folks' attention, and then once kind of that initial snowball starts going, then folks start to really hone in on it.
But do you think, because I've experienced this as well, which is why I ask, do you think that the attention will eventually cause its demise, right? Too many people get into it and then it just like falls flat. Do you think that could happen before the fundamental reasons come to it?
Yeah,
Yeah,
as
I
with
could too. That's why I
yeah,
asked.
yeah, completely. It's just like with anything else, right? It's speculative behavior looks the same no matter what you're trading. So while I do think that's going to be a problem for pretty much every asset we've talked about, gold, silver, Bitcoin, overcrowding, everyone getting too excited, kind of getting the parabolic moves.
Yeah.
I think once that, and that, that I don't think that's happened yet, but once that does happen, I think that once it kind of settles in, it settles in at a much higher price than now. So although, yes, at some point it will get overcrowded and pull back and arguably crash, I think the crash will be to a much higher level than where it started.
Okay. Okay. I can get behind that. So tell me now, let's shift over to something that has had that parabolic move like Tesla, right? People jump in. That's the new millennial trade where it's like you buy Tesla, you make money. So is that going to be symptomatic of this market? Because I was just talking to Chi, and he was saying, things have changed. Things are moving a lot faster. We're seeing more funds going into places that may not have been before. And we're thinking about like space. We're thinking about Beyond Meat. We're thinking about Tesla. Do you feel that these crashes up are going to be followed by crashes down, or do you think it's just going to be like I don't know, like a consolidation, right? Instead of coming from 1,500 to 500 and over a few weeks, do you think it'll go from 1,500 to like 500 over 2 or 3 years, if it ever goes to 500?
Right. No, I think in this market everything's been sped up.
Yeah.
So probably the first one where it would go, if it were to drop that much, probably happens over the course of a month. And the reason is, and it happens both directions, right? So it's not just to the upside or the downside. A lot of that is a function of the Fed. And a lot of that is because the market really isn't moving on fundamentals. We kind of make fun of that a little bit. The people that would look at this market with fundamentals would probably be ripping their hair out because
Yeah.
the fundamentals don't support pretty much anything you see on the screen. So it's moving a lot more on stimulus and government intervention. So oddly enough, that suppresses volatility. So you kind of get like melting markets to the upside. But then once volatility comes back, it comes back multiple times of what it would be normally. So kind of like a zombie mode up and then kind of jumps out the window.
Listen, that really makes me think about the end of 2019 coming into 2020, where it was just, stair step higher every day and then just cliff jump, right? And that's when the VIX was, let's call it 8, 8, 9, real low, setting new all-time lows in the VIX. Now we're like mid-20s, maybe high 20s on the VIX on a daily basis. And I mean, and the market's going up, right? That's the concern I have is now that we've got this elevated volatility, is it going to be even more drastic moves down when it does happen? It sounds like that may be what you were thinking as well.
Yeah, no, that's a very good point, is the fact that we've made a new high in the NASDAQ and briefly in the S&Ps this year. And like you said, the VIX is in 25 right now. So that's not entirely common, and it is a red flag, or maybe not a red flag, but definitely a yellow caution light, that not everything is as it seems. And you mentioned a great point, going into 2019 or the end of 2019 was probably the quintessential melt up, just every day a little bit up, and then you get to the middle of February and it's just cliff jumps.
Yeah.
So I think that's the pattern for now is extended periods of that zombie kind of lurching market, and then it hits a point and kind of cliff dives.
Oh, right. Well, we got a lot of excitement in store for us then.
Yeah, it pays to be active, I think.
Yeah, I couldn't agree more. And then, I know of family members, I know a lot of people who felt like they were super savvy investors because they were getting out and at the bottom in like mid-March. And, they were like, oh, we got to get out of this. And it's like, oh, you've missed it. Oh, you've missed it again.
Yeah.
And, that's the huge fallacy that a lot of people have with stock trading and investing. And why they get so burned is because they're always on the wrong side of the move. And it's not that they are not smart enough to know that, because they're smart enough people, but it's that they don't understand how the movements actually do work, right? Like I had somebody ask me the other day, he wanted to buy some weed stocks, right? And I'm like, sure, as long as it stays above, like, let's call it 140, and as long as it stays above 140, I'm good with it. But if it drops below 140, you don't want it. That means because nobody wants it, right? It's below your moving average. Nobody cares to be there. So when I explained it to him, I was like, you buy high and then you sell higher. And I was like, it's a fool's game to try and buy low and sell high, because you can never pick how low it's going to go.
Yeah. You never know if that falling knife is going to, cut you.
Yeah.
I've written a short guide on how you can use the Triple Stock Profit system. It's the secret weapon every investor needs right now to change your financial future. And you can get it for free by visiting triplestockprofits.com or in the links below. Also, if you want to join a community of traders just like you can get free access to the elite membership that has even more resources to help you trade faster and trade smarter.
So Sam, this has been a great chat. I've learned a lot about gold and Bitcoin and everything that's going on out there. And I do really appreciate your time sharing all that. Where can people learn more about you and Simpler Trading?
Yeah, thanks for asking. So we're live trading right now. We have a live trading room. We make live trading calls. And we basically show you guys what 10 real professional traders do every day. So the way to check us out is to go to simplertrading.com/join, and you can check us out for a trial.
Very cool. Well, make sure you head on over to simplertrading.com and to learn more about Sam and his cohorts down in Austin. They run a great service, and I really appreciate the fact that I can network with these people and have them on a more frequent basis. This is great for me, because I can, it makes content so much easier when I can just ask you questions and you can be the expert and share with the audience what you're thinking. So I appreciate that, Sam.
Yeah, no, happy to do it.
Yeah, absolutely. And thank you guys for tuning in to today's How to Trade Stocks and Options podcast. Make sure you like, subscribe, and enable notifications. That way you never miss any of the tools, tips, and tricks that we upload every single week to help you trade faster and trade smarter. And I'll see you on the next episode.